Thanks, everybody. Thanks for joining us today. Today, we're going over the Greater Phoenix Metropolitan Housing Statistics for the week ending October. October. See, you got me in the October thing.
Sorry, Todd.
August 25th, 2025. At 26. Gee, you know what? Here, let's go back. Hold on. Thanks, everybody, for joining us today. Today, we're going over the Greater Phoenix Metropolitan Housing Statistics for the week ending August 25th, 2026. Let's get right into our numbers. 82 days closed on market this past week, a 5.01 month supply. Absorption rate was at 19.94. Average list price this past week, $700,200. Average sale price this past week, $597,754. And our list price to sale price retention came in at 97.42. Active inventory up just a very little again, 24,439 available product. Pending is sitting at 3,566 and closed units month to date at 3,616. New listings taken this past week, down just slightly, 1 unit off, 1,899. Days on market for active came in at 92 and 82 for closed. Lower left-hand side, where we get to see the active price ranges by price range itself, unit count, days on market. Again, you'll see there's just a few markets that have contracted a little bit. The rest of them are growing. We take a look at the overall. Properties under 600,000 represent 68.73% of the entire MLS. 600 to 1 million is 19.7 or 19.17, and a million and up is at 12.10. So the spreadsheet where everybody gets to be the expert. Why? Well, because we're comparing week over week, month over month, year over year, all on one sheet. So again, the left column, we have the current week numbers, 1,899 new listings versus, like I said, 1,900. So what we're really looking for is a comparison of last week to see a little bit of a trend. And we're also looking for last year, same week, which is the salmon color just to your right at 1,827. So again, we're competitive. We're maybe even a little ahead this particular week over week, but we are still in line with what that 2025 numbers were. Active inventory is at 24,439, up just slightly. We're at 24,170. So we did actually go above what we did last year. We were down below a little bit. 672 are in the coming soon category. 18,563 single family detached. 2,597 new home construction product that's in there right now. Obviously, there's significantly more than that. Non-distress represents 97.6% of the entire inventory. 23,859 units. Looking at pending, this is the buyers that are in escrow, where you have a meeting of the minds between the seller and the buyers at any one time. 3,566 today versus 3,650 last week, 3,883 last year. So we're down about 300. There's 300 fewer buyers in the marketplace right now that are engaging than was last year. Looking at closed, we're at 3,616 month to date. We are near the end. So again, the last week of the month is when everything closes, and then it trickles over into maybe the first couple of days of the new month. But we're at 4,090 units at this point. We're at 3,616, 400 units and plus 460 short of where we would normally be. So again, we're may have, if you look way over in the blue on the right-hand side, we've had 2 green months. Well, actually, if you look at it, we've had 7 green months in a row. So things are really good from that perspective. Could this be the slowdown, meaning just the summer market is over? It could be. Again, we'll get ready for the second home market and when the snowbirds all come to town. And so we'll see a little bit of a reprise probably in the September market. But let's keep going and keep track of that for you guys. Month supply, we're at 5. We're in that mid zone. So we're in a neutral market. This has been pretty much where we've been most of the time. We're at 4.7 month supply last year. So again, relatively consistent. Just for grins and giggles, look a little further into the goldenrod section. 2 years ago, we had a 2.3 month supply. We were absorbing 43% of the inventory every single month. That's almost half. Right now, we're only absorbing 19.94. So the median sale price is what we always want to track, because this is really telling us what's going on. Obviously, week over week, you'll have some houses that you'll have that median be higher or lower, which is why we switched this to a month-to-date number instead of about 6 months ago instead of that week over week analysis. So 450,000, we were at 449 last year. So again, what if you're looking at the numbers, you're saying, yeah, you know what, the of what's closing month over month, year over year, we're sitting right still in that 450,000 median price. So numbers aren't getting out of hand, but they're also not going down anymore. And I think that's important to note that, the properties, sellers aren't necessarily having to give the property away to make it go. 82 days on market. It's a little higher than we'd normally like. Normally, rule of thumb is at 70. And our list price to sale price retention is at 97.42. 97.8 is our 5-year historical average. So again, last year we were at 97.4. Again, market, what we're seeing here is there are sellers in the marketplace that are willing to list. They're willing to walk away from that 2.5%, 3%. That is such old news at this point. The reality is, sellers are in the marketplace, want to sell. Then there's inventory, so they can buy. We look at buyers in the marketplace. That's probably the big number difference is we're probably 1,500 people short than what we would normally like. That would get us into that 3-month supply, which would really be a brisk market, which is what we're really looking for.
Well, I was out of town this weekend, so I took off from the market.
Mike,
so
you can't do
that's
that.
what happened.
So this is what happened.
You damaged the market.
Yeah.
Well,